whatever job or business you do or from whichever source you earn money, at some point you must have felt tired and thought, when will that day come when I do not need to work anymore? Still, my earnings are regularly coming. When will I get break from my daily work routine? This entire concept is called financial freedom, where your money, your investments start working for you, and slowly your portfolio will grow to a point where your returns and your interest will cover all your monthly expenses. But it is only possible when you save some part of your income and invest it smartly. Nowadays, mostly people know that they need to save some money from their salaries and need to invest if they want to secure their future. Yet many people fail to make good investments because of lack of knowledge. They don't know where to invest and how to invest, so that they built a well diversified investment portfolio. Today's video is very special because here we are going to discuss 10 such investment options that are available in India. They are potentially strong because they may help you to generate a passive source of income for yourself. And all these investments are such that any person can start investing with a small capital amount based on his or her own research. This video is brought to you purely for education purpose. If you find it useful, I request you to please appreciate us so that we keep on making such videos in the near future for you people. Please like and share the video as much as possible, and if you are new to my channel Diversify Investment, make sure to subscribe and do hit the bell icon for timely notifications whenever I post a new video. Now let's get back to the topic and discuss the first investment option in today's list, that is Public Provident Fund, which is known as PPF. It is an excellent investment option that comes with a lock-in period of 15 years. It is backed by the Government of India and its interest rates are also revised quarterly by the government. Major highlight about the Public Provident Fund is that whatever interest you earn from this scheme plus your principal amount, the entire amount which you get at the maturity is tax free. And if needed, you can also take loan against the balance available in your PPF account. Also, here you get the feature of partial pre-maturity withdrawal. But for this, you need to understand all the terms and conditions that are applicable in whatever bank you have opened your PPF account. Next, second investment option is similar to PPF, which is known as EPF. This means that Employee Provident Fund. It is basically a retirement-oriented investment scheme where employee contributes a certain amount from his or her salary to this scheme, which is meant to be used after retirement. For example, if an employee earns 50,000 rupees per month and he start contributing 2,500 rupees to EPF scheme, then his company will also contribute equal amount of 2,500 to his EPF account. The special thing about this scheme is that the entire corpus which you built over the period of time is completely tax free at the time of maturity. Now, I'm sure that out of all these 10 investment options, there are people who might be already knowing about any 2 investment options, or some may know about any 5, 6 or 7 investment options. But today's video is special because of this, that we are discussing 10 available investment options in India in detail, which will help you build more stronger and well diversified investment portfolio so that your journey of achieving financial freedom becomes a bit easier. Now, if you are working and you want to plan for your retirement, then there is another very powerful investment instrument available that is on number 3 in our today's list. That is called National Pension Scheme, NPS. It is also a tax saving investment option which remains locked in until you retire. Compared to PPF and EPF, NPS is better from return point of view if you study it from a return perspective. Now, point is that the entire corpus that you built is not completely tax free at the time of maturity. Certain portion of it is tax free and the rest income that you built is taxable. Under this scheme, at the time of maturity, you can withdraw 40% of your total corpus as lump sum amount. For rest 60% of the corpus, you have to purchase an annuity plan by which you will get pension for the life. Moving ahead to number 4, you can directly invest into the equity market. You can purchase shares based upon your own knowledge and research. This is one such investment option that will help you generate higher returns. However, you must be aware about that higher returns come with higher risk, and your returns heavily depend on the performance of specific company whose shares you are purchasing. To invest in stock market, you must have knowledge, time and experience. All that matters a lot. Also, you need to know about the risk associated with that specific investment. You need to evaluate how much risk you can take, and then as a beginner, you must be knowing from where to start and where to invest. Now, people earn from stock market in two ways. One is through investing that people do for long term, and they get benefit in terms of dividends and all. Companies distribute dividend quarterly or annually based upon their own performance. Also, second way of earning from stock market is by trading. Some people do intraday trading, some do swing trading, even some do FNO trading. But if you don't have that much knowledge and you cannot give that much time to the market, then there are certain other investment options available in market like mutual funds, that is on number 5 in today's list. Mutual fund is a portfolio of assets and securities that is managed by a professional fund manager. There are many mutual fund companies that are currently operating in Indian market. It is a very flexible investment option with high liquidity. Whenever you want, you can start or stop investing. There is no major hustle in this. There is high transparency while investing in mutual funds, and you can also start investing through SIP. That is systematic investment plan. You don't need much time and knowledge to invest in this. Every fund has its own portfolio and a dedicated fund manager who manages the fund under the guidelines of SEBI, RBI and other authorities. There are mainly 3 types of mutual funds available. First one is equity mutual funds, which invest your money into the equity market, that is directly in stock market. Second is debt mutual funds, which invest your money into government securities and bonds. Third is hybrid mutual fund, which invest to both equity and debt instruments. In equity mutual funds, you get an opportunity to invest in small cap, mid cap and large cap companies. In this investment option, you can secure high returns, but you must be aware about the risk associated with this investment. Also, nowadays, exchange traded funds, that is ETF, is gaining high popularity. That is also one investment option that you can explore. But if you are interested in investing in ETFs, firstly you need to open your Demat account, and then you can start investing in ETFs. Just like you purchase shares of any company, you can purchase ETF from the stock exchange. But in case of mutual funds, you don't need to open any Demat account. You can directly purchase online or offline from any mutual fund distributor. Also, you can get that. Now, moving on to number 6, which is investing in corporate bonds. Many times what happens when companies need funds, they prefer not to take loan from the bank and not to issue new shares. Instead, they raise fund directly from the public or investors, and in return they issue bonds. These bonds come with fixed tenure during which company continues to pay the committed interest to the investor. Also, there are many government agencies which provide rating to these bonds, and there are many websites available from which you can directly purchase these corporate bonds. Now, moving on to number 7, this investment option has always been at top for Indians. Yes, I am talking about gold. Earlier, we used to purchase only physical gold, but now there are many options available in this market through which you can invest in gold, such as digital gold, gold ETFs, gold mutual funds, and the most attractive investment option via which you can invest into gold is sovereign gold bond, where you not only get the benefit of gold price appreciation over the period of time, but also you get annual interest from the government. However, at the moment, you don't have an option to invest in sovereign gold bond, as government has not released any fresh issue since last year. So you are only left with options like investing in gold ETFs, gold mutual funds or digital gold. Now you tell me in the comment section which option you prefer to invest in gold. Now coming to number 8, it is a safe, secure and a traditional investment option which is called fixed deposit, that is FD. Benefit of investing in FD is that you get capital protection along with fixed interest on a specific date. The day you create an FD, you already know the exact interest rate that you are going to get and the total amount that you will receive at the maturity. There is no issue with liquidity. You can assess your funds in real time using net banking with just a single click. There is also a variant available known as tax saving FDs. Here you get tax benefits on the interest earned, but it comes with a lock-in period of 5 years. Even if you don't consider fixed deposit as a great investment option, still you can park such emergency funds to the FDs which you need to withdraw immediately whenever you require. Now, investment option number 9 is recurring deposit, that is RD scheme. In this scheme, you deposit a fixed amount of money to your RD account every month. The tenure and interest rate is fixed at the beginning when you start investing in this scheme, and it cannot be changed later on. The major benefit of investing in RD is that if you are struggling to save some money from your salary, it will help you save a fixed amount every month in a disciplined way. Apart from banks, post office also offers RD scheme. You can explore there also. Now moving on to investment option number 10, that is REIT, Real Estate Investment Trust. REIT is basically a company that owns, operates or finances income generating commercial real estate. These companies hold a portfolio of commercial real estates from which they earn rental income. Investors who buy REIT units get a portion of this rental income as per their holding. So if you want to invest in commercial real estate, then REIT can be a great option for you people where you do not require any huge investment funds. There are currently 3 listed REITs available in India. First one is Brookfield India REIT, second is Mindspace Business REIT, and third is Embassy Office REIT. A special point is that REITs are regulated by SEBI. You can buy or sell REIT units anytime just like stocks, and 90% of the rental income is distributed among the shareholders in terms of dividend. And also a part of this income is tax free. There are many websites available from which you can get detailed information about these REITs. You need to remember that this video is created only for knowledge sharing purpose from educational point of view only. We are not promoting any of the product listed in today's video. You need to make your own investment decision based on complete study and research. Gathering complete information about the investment option in which you are interested in, and kindly make informed decisions and be aware about the risk associated with that investment, because making smart money moves is crucial and financial education is the key if you are going on the path of achieving financial freedom. If you find this video useful, I kindly request you to like and share the video as much as possible, and do share your opinion in the comment section that which investment option you are interested in to explore more. Keep encouraging us so that we come up with more such financial education videos for you people, and do subscribe to my channel Diversify Investment, and don't forget to hit the bell icon so that you receive all the timely notification of further videos that I will come up with. That's all for today. Thank you for watching and keep supporting.